Stock markets had a really good week, so there aren't too many oversold stocks this week. So there was one super oversold signal, and this is for Roper Technologies. So I don't have a lot of history here for Roper Technologies. The super oversold signal was only previously triggered during the COVID crash. So this is a very rare signal indeed. So I did check the version of BTFDBot that I run locally that has data going all the way back to 2006, and the super oversold signal wasn't triggered any other times previously. So this could be a once in a lifetime almost opportunity to buy Roper Technologies. So is it worth buying? I'm going to have a look in FastGraphs and have a quick look at the fundamentals here. So it's generally been following a price to earnings ratio of 25. And we're well below it at the moment. So what do they do? So they do application software. They're a huge company, nearly 50 billion. Not much debt. Decent earnings per share. And the dividend's been increasing. They've had a good run, although they did seem to cut it between 2012 and 2013. Let's have a little look and see what people are saying about it. So Zacks Research, what do they say? They say to hodl, and seeking alpha research can be useful or not really. I don't think any of these people know what they're talking about usually. But it's quite good just for getting a vibe and seeing if there's anything we should know about. Well, I don't think there's any red flags here. So I did buy this one, and I might buy some more next week. It looks kind of okay. So if it reverted to that, 25, put it in our forecast. We're going here. So this is the analyst scorecard, and see how accurate they are. I think their profits are fairly predictable, so I don't think there's any surprises there. That all looks good. Go back here. What was that PE again? So they have a PE of 25.47. If we go in here, find it. This one. So after 2 years, they should return 15.56% a year, including dividends, if they revert to that price earnings ratio. So if they go back above the blue line again, then we should be alright. I feel this one is okay. It's been below it not many times, unless we're in the start of a big downturn, but I don't believe we are. What else? NVIDIA appeared actually. But you might have had to be very quick on this one. This was a large gap down. This was their news in the week, wasn't it? Was it this week they released their results? So there's been a rare pullback on NVIDIA. So if you believe in the AI hype, then this could be an interesting opportunity here. Deere Company also had a gap down. So these have a pretty good record. That was quite a big gap down. See, we've had them before, although that one hasn't been profitable yet. That one was profitable. It rebounded straight up again. I'm not sure about this one. They've had a good run. Not terribly interested in this one. I forgot to check NVIDIA. Let's see, large gap down. It has a really good success rate. I think only once has it broken even. And obviously this one is a work in progress. So this could be a golden opportunity. Maybe we'll be kicking ourselves in a month or two that we should buy NVIDIA below 180. Maybe that was an absolute bargain. I'm still wary of this gap at 120 though. Do you think this will be filled? Let me know in the comments. What else do we have? JM Smucker. These food companies have been really smashed to bits. I don't know if Americans are not eating anymore or something's going on. Snacking less. I'm in the UK and Pringles are so freaking expensive now that maybe people just aren't buying snacks anymore. What was this? 50-day low. So these have had a patchy record. The expectancy is less than 2%. Mostly I think this one failed. Yeah, that was over a 20% loss. And then we bought this one. And that one's a work in progress, so it's not terribly good, although it's better value at around 100, I guess. I'm waiting for this one to be super oversold. In fact, I think it was. I think I bought this one when it really dumped. So at the moment, it kind of looks like it's trending down, but I wouldn't be surprised if there's another super oversold indicator soon. So I think I'll be staying out of this one. What else do we have? Lockheed Martin. It's interesting. I think I might buy this one. What was this? 50-day low. I'm kind of tempted by this one. It's in a really nice uptrend. And we've avoided the bubble. That would have been a bad loss, I guess. We have a couple of Williams weekly signals, so this indicates they might be really oversold. Fastenal, this is a really good company. And this was Williams weekly. This has a really good history. This is looking quite good. I don't know if it's reached super oversold yet, but there weren't any signals up here. This looks a really interesting one. So I don't know much about this company. If you know anything, any reasons why it should be avoided. Maybe it's gone up a bit too much. So again, it normally hogs this blue line here, a PE of 30. The dividends of it all over the place, although they might just have had really bumper years. So if the price earnings ratio stays around 30, long-term trend. Yeah, so the problem is that here we would only make less than 2%, so I think this one is still overvalued. So FastGraphs said probably we should avoid this one. We wouldn't really lose money, but if their earnings take a hit, then we really would. Houlihan Lokey. I love that name. So this is another Williams one. And they have quite a good rate. It's on a steady upward trend. So we've only ever broken even once, and we haven't had any losing trades so far since 2015. That kind of looks interesting. I don't know if we'll get some more money. We should be okay for 10%, or even 20%, but maybe a small swing trade here would be good. So they're an investment bank, 12 billion, not much debt. Pretty good earnings per share yield. Maybe a little bit overvalued. So I'm not sure what PE ratio. They're definitely overvalued if they're on that PE. But you can change this to see what their current growth's more like. So they seem to be hogging this line more. A PE of 27. And if they were to go back there after 2 years, there's one more stock this week, and that's Canadian National Railway, and that's made a 50-day low. This is another good stock. If you think Trump will climb down over tariffs and things, then this is a screaming buy, really. So it wasn't a nice uptrend, and then Trump came in and the wheels kind of fell off. I don't know if we've had super oversold. We did actually. Both of those are profitable. The 50-day lows have a pretty good record. So it's in a very long-term uptrend, and dividend looks well maintainable. Analysts' reports are a bit variable. If they have a bad year, they don't miss it by much. So they seem to be reverting to this blue line here, a PE of 18. So after 2 years, we could possibly get 14% a year. That's with capital appreciation and dividends. So I did buy quite a bit of this earlier in the year, but I think I was way too early. Although I think that they will recover, start marching on upwards. So that was this week's swing trade buy signals. Obviously do your own research before you do buy any of them. Again, there weren't too many this week because the market had a huge up week. Really the time to be buying stocks was the previous week when they were really dumping hard. I hope you found it useful. Thanks for watching.